The enthusiasm over the stock market last week was dampened for most of the week by worries over the potential impact of Hurricane Florence. Though the storm fortunately weakened by Friday, there is likely to be a very negative long-term impact on the region as massive flooding is expected. Stocks held early gains even as shares of Apple and Asia-based suppliers slumped after President Donald Trump insisted his trade war with China will spur more manufacturing jobs in the U.S. Photographer Michael Nagel, Bloomberg on Friday. The stock market had to also deal with the new developments regarding former campaign chair Paul Manafort and the mid-afternoon announcement that President Trump was moving forward on plans for another $200 billion in tariffs. This reversed the positive market impact from Thursday that the Chinese were invited to new trade talks by Treasury Secretary Mnuchin. Thomas Spray-VibeReport.com. For the week, the Dow Jones Transports led the way, gaining 1.97%. It has been strong all month, and the positive performance for all of the major averages keeps the bullish momentum intact. This was a bullish development for the Nasdaq 100 (NDX), as it had dropped 2.9% the previous week. Over the past few weeks, the small-cap Russell 2000 has lagged the S&P. Thomas Spray-VibeReport.com. The weekly chart of the Dow Jones Transports shows that it completed the flag formation, lines A and B, at the start of August. The price target from the formation is in the 12,700-800 area, which is 10% above Friday's close. The weekly chart of the Dow Jones Industrials show that it has not yet surpassed the January high at 26.616. The completion of the chart formation, line C and D, on the Dow Industrials has upside targets in the 29,800 to 30,200 area. Thomas Spray-VibeReport.com. Given the performance of the Dow Transports, it is not surprising that the Industrial Sector Fund, XLI, was one of the week's best performers, up 1.48%. This ETF is only up 4% YTD, while one of the week's other best performers, the Technology Sector Fund, XLK, is up 11.41% YTD. The Energy Sector, XLE, was up 1.46% last week, while the Consumer Discretionary, XLY, gained 1.34%. The positive relative performance analysis on XLY has been discussed since early in the year. Some stock market traders were nervous at the start of the week as they wondered how the market would react to the annual product launch by Apple, Inc. AAPL was one of the most overbought stocks in the Dow Industrials at the end of August. Therefore, I wondered last week, are overbought Dow stocks stalling the market's rally? StockCharts.com. Thomas Spray-VibeReport.com. As this intraday chart indicates, AAPL had closed week on Friday, September 7th, and volume was heavy. The selling continued early last week as AAPL had a low of $216.56 early Tuesday. By close, it was trading above $223 and hit a high of $228.35 on Thursday. A further rally is needed in order to be confident that the correction in AAPL is over. The stock market's decline from the late August highs has disappointed some investors as the bullish percent dropped 10.1% to 32.1% in the latest AAII survey. The bearish percent rose 6.5% to 32.8%. This decline in bullishness is characteristic of a correction that is a buying opportunity. However, it seems as though some investors are still avoiding stocks, as the financial media has often highlighted the reasons why the average investor should stay out of stocks. There have been so many instances in the past 9 years where analysts have warned of a Eurozone breakup that I have lost count. These Eurozone concerns triggered market corrections in the past have created some good buying opportunities as some investors sold out of fear. I believe that the trade fears have been playing a similar role over the past several months, but the stock market's reaction recently has become more muted. This may be a result in part of the continued trend of strong economic data that the public is finally starting to acknowledge. As I have been warned since the spring, there will be months when some of the economic data disappoints. Last week it was the retail sales which came in at 0.1%, while the consensus was looking for a rise of 0.4%. Both the PPI and CPI data also came in weaker than expected, especially the PPI, as a rise of 0.2% was expected but a decline of 0.1% was reported. StockCharts.com to Masspray-Vibe-Report.com. However, Friday's mid-month report on consumer sentiment from the University of Michigan was stronger than expected at 100.8, well above the consensus estimate of 97. The chart shows a strong uptrend, line A, going back to 2014. There was a period of consolidation in 2015-2016, line A, that was resolved by new highs earlier this year. This week the Empire State Manufacturing Survey and housing starts are released, followed on Thursday by the Philadelphia Fed Business Survey, existing home sales and leading indicators. ThomasSpray-VibeReport.com. As I mentioned last week, the current pullback is likely to be a buying opportunity, and we should know early in the week whether the correction is over. The Spider Trust SPY dropped down to the 20-day EMA on the pullback, and the S. The weekly and daily A/D lines made new highs again last week. The daily on-balance volume (OBV) moved back above its WMA on Wednesday, consistent with the end of the pullback. The weekly OBV, not shown, has been leading prices higher since July. The daily Stark band is at $292.90 with chart resistance, line A, at $295. The weekly Stark band is also at $295. The 20-day EMA is now at $288.21 with monthly pivot support at $287.07. ThomasSpray-VibeReport.com. The Invesco QQQ Trust QQQ, after a one-week pullback, closed higher last week. Once above the prior high at $187.52, there is chart and weekly Stark band resistance at $191.66. The quarterly pivot resistance stands at $191.94. The weekly Nasdaq 100 A/D line pulled back to support at line C a week ago but has now turned higher. It is just below the prior low. The daily A/D line, not shown, is back above its rising WMA but needs a few more strong days to signal upward acceleration. Though more tariffs are thought to have the most negative impact on the large-cap industrial stocks, the SPDR Dow Jones Industrials (DA) is still looking the best of the market trading ETFs and has been a favorite of traders for most of the summer. This is a good example of why it is important to analyze all of the advance-decline lines in order to pick the best ETF. The next upside target for DA is in the $267 to $269 area. For the week ahead, investors should focus on identifying the strong support levels in the market-leading ETFs where new buying can be considered. For stock traders, there are several industry groups that have recently completed major trading ranges, so stocks in these industry groups should be reviewed for new buying opportunities. My Viper ETF report. In the Viper Hot Stocks report, I provide market analysis twice a week with specific buy and sell advice. New subscribers receive 5 trading lessons for just $34.95 each per month.